Hi, this is Mark at Mark Brower Properties, coming to you with a message about a possible opportunity. If you own a townhome or a condo, there could be an opportunity to pivot your real estate holdings and set yourself up for more stability, better cash flow, and most importantly, better wealth building opportunities over the next 10 to 20 years. Here's why. We have two dynamics at play right now in the greater Phoenix area. Number one, we have an affordability problem, which means that people can't afford homes at current interest rates and home sale prices. So anything under $400,000, $450,000 is selling very quickly. So if you're an owner of a townhome or a condo, you have an opportunity to take advantage of that strong seller's market and get maximum dollar for the property if you were to sell it now. But a lot of our clients are like, well, I'm a long-term holder. I don't need to do that and pay 6-7%, transaction costs. So why would I do that? The other dynamic that we see right now is that rents are weak in multifamily and townhomes and condos in particular. Of all the property asset types that we're managing and renting, those that are seeing the most price drops and the longest days on market are townhomes and condos, specifically in kind of the inner areas of town. So those two factors combined present an opportunity. If you own a townhome or condo and you have at least $100,000 of equity in that property that could be sort of harvested by selling the property, you can utilize something called a 1031 tax deferred exchange, where you don't pay taxes on the proceeds, the profits from the sale. You roll them into the purchase of another property, which is a tremendous opportunity. So if you had, for example, a $350,000 townhome or condo, rents are weak, maybe that neighborhood has already reached its climax in terms of neighborhood life cycle. HOA might be raising its dues as the community ages. Community infrastructure and capital improvement costs rise, and so HOA dues start rising. That kind of tamps down the appreciation rates of the asset itself. If we sell that property and for like $350,000, you have $150,000 of equity. Transfer that to a purchase of a single family home, 3-bed, 2-bath in Queen Creek or Santan in an emerging market, in a newer asset that's going to have really low expense ratios, going to be very desirable to renters, going to have a much more stable cash flow. You could be positioning yourself for faster appreciation over the next 10 to 20 years. So an asset in a mature, maybe declining area of town might appreciate still, 2 to 3.5% a year. In an emerging market, could be 4 to 5% a year. And if you look at those two trend lines over time, next 10 to 20 years, there's some tremendous difference in the amount of wealth that it builds for you. So we've helped several clients with this recently. Thought I'd put a video together in case there are others that this would work for. It doesn't work for everybody. Whether your property is vacant or tenant occupied right now, and if you think this might help position you for better wealth building over time, we should talk about it and talk about some options there. Thanks so much for watching, and look forward to talking with you.